Eyo Value Investors, how are you doing? My name is Stijn and welcome to my YouTube channel. Alpine Technologies, or ALPP stock, has taken a big hit in the last couple of months. And of course the whole OTC or over-the-counter market is down. But then, as long-term investors, should we keep holding our shares, or should we maybe even scoop up some more? Well, to answer those questions, we'll first talk about why Alpine is such a good company. Second, their 2020 earnings and their current financials. Third, what about the uplisting? Still happening or what? And lastly, my own buy targets and price predictions. Let's go. So, why ALPP? Well, we've talked a lot about this incredible holding corporation in my other videos on ALPP stock. And we've especially done deep digging onto awesome subsidiaries ALPP has. So I'll try to keep the old info as short as possible in this video. Check out this video if you want to go more in depth into the subsidiaries individually. And if you want to go deeper into the business model, their DSF model, check out this video linked in the top right corner. But in short, ALPP uses a DSF business model. And they use this model to look for interesting companies to invest in. And the D from DSF stands for driver, which they see as a company that's set up nicely for exponential growth. Second, the S, stabilizer, is a company that's capable of generating positive cash flows from the get-go. And lastly, facilitators are companies that materially enable drivers. So for example, chip makers, manufacturers, etc. Cool. So ALPP uses their stabilizers and facilitators to financially and materially enable their drivers, their hyper growth companies. And such drivers then have greater odds of succeeding in their competitive hyper growth spaces. Better odds compared to their competing startups, which do not have a DSF business model to support them. Great examples of drivers held by Alpine are Impossible Aerospace and Vayu. And at the helm of this company stands Kent Wilson. Check out his qualifications and interviews yourself. But I think he's honest, he's capable, and I just love the fact that he's the inventor of the DSF business model. Then the financials. Obviously we're still waiting for the Q1 2021 financials. And multiple subsidiaries like Excel Fabrications and Quality Circuit Assembly are expected to perform extremely well in the next quarter. But what we do have is their 2020 earnings. So let's dig into that now. We can see that the revenue was up to $33 million for the year 2020, which is a $5.3 million or 90% increase compared to 2019. Cool. The CEO, Kent Wilson, however, added that the revenue should have been $47 million for 2020. But COVID-19 had other plans. In my opinion, that's completely fine. And when a company still manages to grow at 19% during a pandemic, while retaining 95% of their workforce, well, that just really shows their financial health and their competitive advantage. During an interview on the Proactive YouTube channel, Kent Wilson said the following.
In Q1, we were able to empower and equip our subsidiaries to be hyper competitive. And the efforts and the labor and the pain of 2021 is finally really paying dividends. Every vertical market that we're dealing right now, we're having a shortage of labor. We can't find the people to work. We, as a company, were able to retain 95% of our employees. So we're having opportunities that our competitors just can't match.
So Alpine decided to retain their employees, which did cut into their earnings quite a bit. And we can see that on their gross profit, which is down compared to 2019, even with higher revenues. But as Kent said, they retained their employees to keep their moat, their competitive advantage. Kent Wilson and his team know the value of the knowledge and experience their employees have, and have done their utmost best to keep their Alpine subsidiaries as competitive as possible. And now their subsidiaries might be even more competitive than they already were, since other companies did lay off their employees. Awesome. Let's hear some more from Kent.
What we're seeing in Q2 and really Q3 of this year, we're starting to see some explosive growth. It's the realization of our hard work and the effectuation of that capital raise that's going to pay some pretty big dividends to our shareholders. and our company long term.
Okay. So there's two main things to unpack from this clip. First, Kent Wilson thinks that Q1 and Q2 of 2021 will be a way different story compared to 2020. And I personally think this is where we'll see some of the explosive growth we've all been waiting for. And second, he referenced to the cash raise Alpine 4 did during the month of February of this year, 2021. And according to this article, Alpine 4 has sold 8.33 million shares to institutional investors at a purchase price of $6 per share. And in hindsight, this is awesome for us current shareholders. Institutions, so the smart money of this world, decided that it's a good idea to buy up to $50 million worth of ALPP stock at $6 per share. And bet your ass that they haven't sold a penny yet. And if those institutions thinks it was a smart deal at $6 per share, and you as an investor like the company and you understand their business, surely at today's prices it's an even better deal. So aside from the assurance we shareholders get, Alpine 4 effectively raised $50 million for whatever they desire. And I think it's a safe bet to assume that they will use the money to acquire even more awesome subsidiaries. Time will tell, but I'm sure this $50 million extra capital sets Alpine 4 up nicely for exponential growth. So back to the 2020 earnings. Do keep in mind that if you're currently investing in Alpine 4, they are unprofitable for now. Actually, they were $8 million in the red for the year 2020, which is an increase of more than 100% compared to 2019. Although most of the added costs can be attributed to growing and of course the pandemic. So assets to liabilities looks quite healthy, and they have about $9 million more of liabilities compared to assets. But it's even less of a problem knowing that Alpine 4 raised $50 million in Q1, which is just months after this balance sheet was made. And to summarize their financials, their earnings for 2020 looks quite good. Especially knowing Alpine comes at a 19% revenue growth for the year, even during the pandemic. It is good to see that they have significantly decreased their debt positions, and it's nice knowing they have enough ammunition laying around to acquire new subsidiaries, and the rumors for Q1 and Q2 of 2021 are looking steamy. But what about the uplisting? So during my last video on ALPP stock, I predicted Alpine would uplist before the 15th of April. And I explained my reasoning in that video. Now fast forward to today, the 18th of April, it is safe to say that this did not happen. Again, let's look at a clip from the awesome interview on the Proactive YouTube channel and some words from the CEO, Kent Wilson, on this matter.
When we gave the estimate back in February, that process, that time frame was actually given from the NASDAQ as far as their timing goes. In fact, if you look at their website, they actually have the 4 to 6 week time frame. So we gave that out based on NASDAQ guidance. Well, it's nothing that Alpine's done. Alpine is actually fundamentally stronger than it has ever been. We meet every check mark of the NASDAQ. What has happened is in January, early January, they have been inundated with new listings, which is good for the NASDAQ. It shows how strong that platform is. But the reality is, where they were probably doing 1 listing a week, they're doing 5 to 10. And so they're just, frankly, it's overwhelmed.
So according to what Kent Wilson said, the NASDAQ was the one that supplied them the 4 to 6 week time frame, which obviously hasn't been met. And from an investor standpoint, even I can see that a lot of companies are currently uplisting to the NASDAQ. So I think he raises some valid points. It is good, however, hearing him state so confidently that Alpine 4 ticks all the boxes for the NASDAQ, and I cannot wait for the company to finally uplist. Do keep in mind though that you should not invest in a company solely because it will uplist. And you should realize that it might take months still before Alpine 4 finally uplists. And I think that's fine. The long-term story doesn't change. So we now know why Alpine 4 is such an amazing company. We've dug through their financials and we've talked about the uplisting. But what about my buy targets for this company? So as we know, Alpine 4 did $33.5 million in revenue in 2020. I think we're going to grow this revenue at 50% a year for the coming 6 years. And I know this 50% might seem steep, but Alpine 4 is investing in hyper-growth companies, and they have about $30 million to invest still. So I'd be extremely surprised if they grow at less than 50% a year for at least the following 6 years. So we'll now grow that revenue at 50% for 6 years, which will get us to a revenue in 2026 of about $380 million. So slap on a price to sales ratio of 10 and we get to a future market cap of about $3.8 billion. And by the way, $3.8 billion results in about $25 per share. So that's a possible increase of about $22 per share, or about 750% compared to today's prices. And now to get to the buy targets, we should calculate the future share price backwards at 15% a year, which is my minimum return on investment. And we would get to a fair share price to pay today of $11. Normally, I would now take a margin of safety of 50% and call it a day. But we need to be honest with ourselves and conclude that this company is quite risky. We are betting on a company to grow extremely rapidly. And that is possible, but it's better to err on the safe side. So rather than dividing the fair share price by 2, like I normally do, I'll divide this one by 3. So this effectively puts us at a buy target with a margin of safety of 66%. And the buy target comes at $3.66. So according to these calculations and my opinions, Alpine 4 Technology is a steal currently at $3 per share, which puts us below my buy target of $3.66. And buying at these prices gives us a potential to 7.5x in just 5 years, which is an insane value proposition. And buying it at today's prices also gives us enough of a margin of safety to feel safe, even when our projections do not work out as we currently expect. I really hope you guys enjoyed this video, and if you did, please give it a like and maybe even subscribe. Comment down below what you want to talk about next, and I'll see you guys in the next one. Peace.